Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual at this time of year, I will stop looking at my daily charts and instead concentrate on the longer term view, using my monthly, even yearly charts to commentate on a market. If you would like to discuss any of these, I'll only too happy to hear from you. So let me now introduce today's longer term chart. Today I'll be looking longer term at LME 3-month copper. In my commentary back in 2022, I noted how back then we had only a single monthly close over the important February 2011 high at 10,190, and also over perhaps the more important congestion between 9,900 and 9,770. We'd also mainly gone sideways in 2021, and there appeared to be, at the time, a new 2021 based uptrend with enough potential for a sideways triangle. Back then it was too early in the life of this sideways triangles to give any potential targets or even the direction. However, what I said at the time is worth repeating, and I quote, "What I can do is give an idea of the potential size of the move, should the market work through the pattern to fruition. Potential move low will be in the order of $784, off of the confirmed break lower, below the lower trend line. As an example, if there was a break this month, then we'd have a downside target in the 81.23 area," end of quote. In March 2022, there was a false break higher to a new all-time high. However, much like the move up in May 2021, there was only the one close over both the February 2011 high at 10,190 and over the more important congestion between 9,900 and 9,770. This was enough to make a double top from the 2020 to 2022 action, and I'll shortly deal with that pattern. But first I want to deal with this sideways triangle. The true break lower happened in June 2022, and by the end of July the market had reached both the primary and secondary targets below for this pattern. Indeed, and this is where I deal with the double top again, the drop in July also reached the primary and the harder to reach secondary target below in the 67.30 zone for the double top. What happened when the market reached down there was interesting, as prices pierced the 50% Fibonacci line of 2015 to 2022 move at 75.81, but started stalling at the rising 5-year moving average, currently at 78.11, which is highlighted in gold on my monthly chart, and finally halted at the very significant 50% Fibonacci line with a big 2008 to 2022 move at 68.36. The rally back up took a while, but the 5-year moving average gradually asserted itself and continued to do so throughout 2022 and into 2023, and actually now into 2024. The initial reactionary pullback up in early 2023 pierced the more recent 2022 base 50% Fibonacci line at 89.01, but this has reasserted itself along with the 2-year moving average, currently 85.93, highlighted in green on my monthly chart. This 2-year moving average is interesting, as during the rallies in early 2023 there was only a single monthly close over it, and is currently doing a pretty good job of capping the market. So effectively what we have now is the market initially being trapped between two 50% Fibonacci lines at 89.01 overhead and 75.81 below, and in mid to late 2023 being squeezed between the declining green 2-year moving average overhead and the rising gold 5-year moving average below. This situation cannot last, and I'll be interested to see which one gives way first. Just be aware there's a high chance of false breaks, just in case. Thank you for watching and listening. This annual broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.